All right, so we'll start the session. Good evening, everyone. Firstly, I would like to thank all the participants for taking their time out from their busy schedule and joining in today. It's a special day because with me I have Amisha Bora. She's the Joint Managing Director at Prabhudar Leeladhar. So Prabhudas Leeladhar. So we thought of inviting her today, and we'll try and read her mind and understand how do we decode this recent budget which was presented by our Honorable Finance Minister, and what sort of correlation it has as far as the equity market is concerned. So let me have the privilege of introducing her. She's an equity expert, spent more than 2.5 decades understanding how to create wealth in the equity markets. And she's a chartered accountant with, as I said, more than almost 27 years of honorable experience in the financial industry per se. G Business Market Analyst Award has been honored her with Editor's Choice Award for outstanding contribution to the equity market. She was also awarded the top 10 women rising star by India Business. And also she conferred as the best salesperson of the year by Asia Money for 3 consecutive years. So a lot of things, she brings on the table as far as her experience is concerned. She's also a member of the CII National Committee on the Capital Markets for about 2 years, I think between 2015 and 16, and was also on the advisory committee of National Stock Exchange for SMEs, a frequent opinion maker in the TV, print media, and her views on the market and investment strategies are sought after by CNBC TV 18, NDTV, Z Business, ET Now, Bloomberg TV, and New York Times, and many more, I would say. So under her leadership and guidance, the organization as a whole has grown many folds into holistic financial services organization. They've also added various complementary businesses, promoted PL Capital Market to carry on full-fledged merchant banking business, besides promoting PL NBFC to complement the broking business. And of course, they also have presence in asset management business. And in fact, they are now focusing more on asset management business and portfolio management services, and shaping up this through various verticals and adding more experienced people on board. So firstly, Amisha, let me welcome you on board on this platform called AIF and PMS Experts India. So it is our absolutely pleasure to have you on this platform today.
It's absolutely my pleasure also, Vikas. I've heard you've been doing very good work and have been servicing your clients. And my only desire is that all the research and efforts that we do, we as brand Prabhudas Leeladhar stand in the market for more than 7 decades now. And we have been not having any incidents with any regulator, despite being regulated in different entities by different regulators like SEBI,
sure,
RBI, IRDA, of course, BSE, NSE. And we stand as a team for integrity and trust. And that comes across in everything that we do, be it our honest opinions in research, be it dealing with our clients.
Yeah.
So I'm very happy you also invited, and you've been also doing great work with your clients in helping them manage their wealth and grow their wealth. So very happy to be with you, dear.
Thank you, ma'am. Thank you for accepting a request. Very kind enough for you to sort of accept this request and come on the show. Take out the time from your busy schedule. So, the format of the show is very simple. What we do is, since we keep interacting with our investors, we keep getting a lot of questions. So I am playing like a messenger here, a role where I am going to ask you a few questions on their behalf. And then, we'll be having a very interactive session for next 30 minutes to 45 minutes. And I will then open the forum for Q&A if anybody wants to participate. So that's how it looks. So what we do is at AIF and PMS Experts India, we've taken this lead of educating and empowering our investors, investor community as a whole. And I mean, irrespective of they have business relationship with us or not, we tend to serve them with more and more ideas and knowledge. And if they wish to know more about your particular product, probably we kind of connect them with your fund managers. So now today, the topic, the agenda of the discussion is the recent budget, which is presented by our Honorable Prime Minister. So we thought you would be the best person to talk about that, because you have been covering equity markets and various research. So what is your first impression as far as this budget is concerned? Over to you, Amisha.
So, on the budget day also, and post that, I attended many channels as well as webinars by whether SOCAM or whatever other channels. And my biggest compliment is that most of the corporates, also have to do envisioning for their teams and outside world to know where they are heading towards. And this opportunity for a government to utilize during budget in envisioning India at 100, I think was amazing. And it also gave an example or evidence while doing envisioning of India, there is not a single topic which is of relevance from here on. Forget about past, is not covered. Be it use of drone for agri, be it acknowledging in whatever form, at least from tax perspective, crypto, making a statement that RBI might have a digital currency or will have a digital currency, or be it exchange of the battery swapping facility or policy. These are all the things and more that we need for tomorrow's India and being relevant. And for that, of course, I give full mark. When we deep dive into the numbers for the current year, which is also budget is what is about, I think the steadfastness with which they continue to stick to the decision that they took during COVID, that they are pro-growth. This is a pro-growth government. So they took a risk and plunged into a little expansive budget last year with a 9% fiscal deficit or 9.8% fiscal deficit. They continue to remain on that path with a 6.4% fiscal deficit target and did not go populist at all. So I think that is full marks for that. Now they have taken a route as policymakers or government in terms of promoting India and growth through capital expenditure. So be it PLI, which is little outside of budget, or budget expenditure on capital expenditure, be it on infra, road, housing, jal, or I think bathrooms. All put together, the emphasis is that we spend on building our capital goods or the capacities and be relevant through reducing logistic cost for not only domestic market, but also global market. So I think both these themes are very well interweaved. When you go through the numbers and deep dive, the assumptions on revenue, whether it is tax revenue or divestment revenue, are very sober and moderate. So there is nothing which it looks like that they will fail to achieve. So I think it's a reasonably very good budget.
So, ma'am, you also talked about they have capital expenditure, and they've been doing it since 2013, ever since Modi government has come into it. Can you throw some more lights on how important it is for our audience to know that how important to spend money on or to take these sort of capex?
Correct. See, it is said, we always use this terminology, the multiplier impact, which means when, as a government, you spend money in making a road. So our taxpayers' money is being used in paying to, say, a contractor. So it is going to one person, that is contractor, that in turn goes to so many vendors of equipments and products, in turn goes to a laborer, in turn goes for consumer durable or non-durable, which is being spent. So the multiplier impact of these infrastructure spending, A, is very high. It is assumed to be 4x. B, it makes our economy extremely competitive. Why? Because in last 20 years, 3 to 4 areas from which India was really not able to compete globally. A was power cost, B was finance cost, but C was our cost of logistics and transport, be it road, rail, or ports. Once we build this and make it efficient and time consumed in doing this is reduced, we become very competitive for globally and for exports. So I think this spending which is going on is extremely positive for the long term as well as short term in the economy.
So you see that there is good amount of correlation between on the one side spend on infrastructure, on the other side they're connecting India and emphasizing more on reducing the cost of the logistic. And we see
Correct.
often our honorable ministers, especially Nitin Gadkari, talks about that they're connecting India completely. So do you think it is going to have a great impact on our economy in 10 years down the line?
Oh, huge impact. I think this will be a very critical factor. And I would relate it also to the fact that what we did in 2002 to 2008 era in building some of the airports, roads. It was Mr. Bajpayee who had started uh, the main yojana, and after that it was followed up by each government, I would say. And once again, there is huge emphasis, and under Mr. Gadkari, the execution speed and is amazing. I think it's one of the best. So yes, it will have a huge bearing on India this year and in next 10 years, substantially high. And last but not the least, when you have a fantastic infrastructure of airports and roads and connectivity, the once again the propensity to travel increases by road and raid or airport,
Yeah.
and in terms of spending and multiplier impact in the economy continues to go up. So I think it is a complete win-win.
Yeah. So other thing is, so ultimately everything is ultimately comes to the overall growth, and our honorable Prime Minister says that the target for 2025 is $5 trillion economy, and therefore all the budgeting is done. Do you think it looks to be an ambitious number at this point of time, or you think it looks to be a realistic according to your house?
We as a house believe 26, 27 is the right time when I'm sure we will cross 5 trillion, and we will be from number fifth economy in the world will travel to number 3, I guess. But for sure, we strongly believe this is the decade of India. It could be a year ahead, it could be a year later. There are many uncertainties globally which can either hasten or a little bit delay. As it is, we know COVID has come from where and nobody knew. So some things like that will definitely have to be factored in. But this is the decade of India.
So there's one school of thought which says that you had 9.5% growth because your base was too low, etc.
Certainly.
On the other hand, people are saying that this looks to be sustainable. And then you have a nominal GDP growth put together coming out to 13, 14. So what makes you to say that by 26, 27, it number looks to be achievable?
See, I think that the composition of GDP, if you see, the service sector is the largest at 60%. So whatever growth even last year we saw, it was just bouncing back of manufacturing largely, but service sector, be it the airline train travel, or be it some of the restaurants and so on and so forth, a lot of activities were still curtailed. And that's why as that bounces back, I think the overall growth in the economy will be much better. All the industry, even retail, shopping, etc., lot of contact and touch based industry was suffering. So I think that the service sector will bounce back. And over the years, while service sector was doing very well, the competitiveness of Indian industry was totally lost. So with consistent effort in last 5 to 7 years on different accounts, and now last being PLI, so anti-dumping duties to some other ways of protection, and now PLI, I think the manufacturing, which is just decimated to 17%, will show substantial growth. So this put together, the manufacturing adding to the overall growth and reforms in agri, I think put together, we will definitely continue to have this 12.5, 13% kind of a real growth.
So when you talk about the overall GDP composition, Amisha, one good thing here is that the service industry is expanding, what you rightly mentioned, and there is an emphasis on and focus more on improving the overall manufacturing output and utilizing the capacity to its fullest. But you see that the agri contribution of the agri is going down in the overall GDP. So what is your sense next 3-4 years? Which sector would contribute the most in the GDP if you have to talk about 9% sort of numbers?
So the service industry, which is say close to about 60, 62% or 64%, I continue to believe that it will, once we stabilize, will have a good 8% kind of a 8 to 10% kind of a growth. Manufacturing will continue to have, which had fallen to minus to 1 to 3. I think it will go back to about 5 to 7% kind of a growth, which is still anemic, and then we grow faster over next 2-3 years. Agri, any which way, agri and ancillary, I think a 2.5 to 3% growth is also very good. When you put all these maths together, we will be at 8.5% kind of a real growth. Add a little bit, 3.5 to 4% on inflation.
Great. So there is a saying that your stock market is a reflection of the economy. On the one hand, you have $5 trillion of economy by 26-27 as targeted by your organization. I mean the indicative numbers. On the other hand, even if you consider 1:1 market cap to GDP ratio, then we are coming to the big number. So what is your sense? If you could
no, my sense is we will be growing at whatever between 9 to 12%. Market cap to GDP will not be at 1, despite the fact that right now we are on a slightly bloated global liquidity, and that will taper over a period of time, bringing volatility. But if we take that 5 years kind of a view, I still tend to believe that a 5 trillion economy will have a 1.4 kind of a multiplier, and we will be and I think that we could be a 7 trillion market cap company, and market cap country is not impossible.
So essentially, which means that market cap would be ahead of the economy. I mean, at times it is behind, at times it is ahead. So your sense is that as a house.
Yes, I am in that camp.
All right. Okay. So what do you think, Amisha, which are the 2-3 sectors you think can outperform significantly and contribute significantly during this time?
So I've been talking about it, and just to re-emphasize that if one sees almost last 10 to 12 years, the emphasis was, of course, on building infrastructure, but the core manufacturing industry was at the receiving end, be it with high power cost, be it with high, and banks were shrinking their balance sheets because of the NPA problems, so higher cost there, or the actual cost pressures and pricing pressures because of China's growth slightly coming down. Now that whole scene is now being seen vis-a-vis that. What is the situation is post-COVID, there is a natural demand globally to have China +1 as their supplier arrangement. And in this last 10-12 years, we have also as a country traveled a lot of distance, be it in terms of our power costs, be it in terms of our logistical port costs. And still there continues to be little gap, which the government has filled up with PLI, giving the performance-linked incentives. So I feel the biggest sector where there is huge turnaround, and it's not for 1 year, 2 years, but 5 to plus years, is manufacturing stroke capital goods. That will be the real turnaround sector, followed by the building materials, because another sector which is turning from a very large slump is residential real estate, supported by many factors going in that favor. So building materials across from commodity, that is cement, but better products like pipes, fans, home appliances, sanitary ware, etc., etc. I think these sector also should continue to do very well. And last but not the least, with whatever hiccup that world tapering and higher bond yields will have, I think that the private sector, the banking sector, not NBFC, not private, public, private, both. The banking sector with its clean balance sheet will ride this growth in the manufacturing and consumption and is very well placed to capture that with very clean balance sheet, very well capitalized. So in order of preference, these are the three sectors. I'm sure we'll have to keep finding niches in clean energy, in something to do with EV, but those are niches. Those are not large themes that we have listed plays.
Sure. So you talked about banking sector going to play important role in terms of fueling the growth of the economy. However, of late, we had almost 13 years of suppressed earnings, not to forget that. And then now we're talking about utilization to go up as high as possible. But of late, we are not witnessing that these corporate banks, so-called, all three you put together, they're not funding the large projects, because the cleaning is done in a manner that, if anything happens tomorrow, the NPA's responsibility lies with the bank ultimately, and then they're a little scared to fund these large. So of late, the economy is not witnessing huge or bigger loans which can really create a lot of big employments or something bigger project can take place. So what do you think? Would that start happening again in the economy, or you think that credit source of the credit will continue to be monitored, or be cautious on that?
So the peak credit growth Indian banking sector was showing in 2005 to 8 era was upwards of 22 to 25%, and in some quarters 30% also. But the composition of that was that those days banks were funding all these infrastructure, large ticket projects also, because on PPP basis, we had all the power plants coming up, all the airports coming up, telecom licenses were, or spectrum was distributed, and so on and so forth. So, but this time around, we feel because of whatever changes in policies also which has happened, we see that the growth in banking, now from that 30%, by the way, it fell to almost 0, 1, 2, 4. Why? Because the corporate book was unwinding and they were focusing all on retail. But net, the credit growth has completely slowed down. From there, now last 2 quarters, it's been bit bouncing back. So when we are talking about banks and its credit growth, it's not that next quarter it will be back to 15%. No, it is a gradual journey from whatever 6-7% to 17-18% in 3 to 4 years' time. And the ideal case is that a 12-14% credit growth also on a combined basis, corporate retail, is a good number. Because when you grow at a rate of your ROE, you don't have to keep on diluting. Those days, bank had to dilute a lot, and in the process, shareholder money is not made so much. When you have a reasonable, respectable ROE, which most of the banks will have, and you grow at a similar pace, shareholders rather make more money.
Sure, that makes sense. I agree. All right. So the other question is, which I'm sure a lot of our clients wants to know. So I'm opening the forum for Q&A, and in case any of the participant has any question, please type in your question in Q&A box, not in the chat box. In the meantime, I'm coming to you. So I remember, there was a time when Modi government took over, and today, if you look at the GST collection, the total budget used to be that size, those days. And then you see the GDP, the GST collection, and you are also witnessing usse zyada to spend ka jitna hamara budget hota tha. So where do you think this budget can go in next 10 years down the line?
The GST monthly collection numbers. So that is a very beautiful exercise that one should do. But I don't think we have done that exercise to give you any more precise numbers. But I can give you some levers that can really make a difference. So, and some anecdotal evidence to that. The GST combined with gradual simplicity in execution and e-way bill and adoption by different corporates is making the unorganized to organized a reality, which took almost 3 years, but now it's a reality. So we are more and more collecting tax on things which were already produced. But I think the game changer once again will be PLI. So my rough calculation showed me that government is giving this incentive for manufacturers to become competitive. Correct? But in turn, when they make production, they will be collecting GST. So they will be front-ending the expense, but will be more than collecting that. The payback of this PLI for government budgets is not more than 6 years.
Yeah, I was asking the same question. Yeah.
Exactly. So I think that it's a very smart move of PLI, but then the GST number can go manifold is what my initial guess is. That A, of course, it is linked to the growth of the economy, but B, as what I said, the manufacturing is the one which will take a big leap in India. And hitherto, which we were importing, will be making here for ourselves. So I think GST number has many legs to go.
Yeah. My last question. So I heard Piyush Goyalji saying that India has the potential to become $10 trillion economy by 2030. I mean, I'm saying that 1 or 2 year you may discount, but and we took almost 50 years to become, more than 55 years to become $1 trillion economy, and now this trillion, the way it is adding up, do you think by 15 years down the line, India will be superpower with about more than $10 trillion size in terms of economy? Do you think it is possible?
I definitely think it is possible. And because A, we are a country with huge natural resources. B, we are a country from the beginning and now more of literate entrepreneurs. These two is very wide in India. So given a now opportunity, so most of the time in the past, we were not realizing whether we were businessmen, small businessmen, or self-employed, that paying tax is important. Paying tax is important not for the country alone, for your own self. Why? Because then gradually your credibility gets built with the system. When your credibility gets built, when you go to ask for a loan, whether it is for private consumption, still it benefits the country, or for any business, your ability to get that funding improves manifold. Now we are going into that change. So we have all the required things to make us really the superpower, the youngest population, but not of illiterates, not of docile, or not of just the community which is very violent. We are largely entrepreneurial community with huge literacy and education. And the way we have paved the way for all these digitization, so we can reach any last mile now with whatever has been done as the Jandan and etc. What is it called? Jam, right?
Yeah.
So that has unlocked our economy. And I always believe that we may say Instagram is a time pass or whatever, but that awakens at the last mile, or YouTube. Without even having your TV, you get exposure to anything in the world, which inspires you to do things. And with 5G, it will even further unlock. So I am extremely bullish with the kind of possibility and resources that we have as a country. And when the policymakers also want to unclog the economy really unclogs. So I think we are really well set for that.
Yeah, so as an organization, Prabhudas Leeladhar, have been serving most of the FIIs in India in terms of providing them domestic research reports. And I think in terms of your rating also, it is at the top notch in terms of quality of the research report that you generate. So my question is, what's their views on India, and what is your sense that you are getting? Because we see that they have been booking their profits and taking the money out throughout the year. Last year they exited. So what's your sense?
So see, when there are two ways. In turn, FIs also are dictated by the flows that they get. And good part of the money which is coming to emerging markets, that is what we and most of the other Asian countries are, is ETF dictated. So that is also a outcome or result of the firming US yields. Not now. Now it has gone to 2%, but this has been in talks for a while. And any emerging market outside of US is considered as a riskier asset as compared to US. So uh, we cannot just judge that the outflows are because of their apathy towards India. It could be a result of reducing risk or compulsory because of the outflows. A. Having said that, India has been in last some time a costly market because of the balance sheets of the banks getting clearing and the profits as a pool of our GDP was so low that we were always looking a very costly market. So it's only some of the long onlys which can have a very sustained view of how this is going to change corporate profits to GDP who stay put. But India, of course, it's at a premium to MSCI last 10 years average and our own last 10 years average multiples. So some kind of, uh, selling from FIIs when globally they have an outflow is bound to happen. And compared to that, after all the wreck that Chinese markets have got, they become so cheap. So some flows can go there. But I think the heartening part is, as and when we will keep having those bouts of volatility, it's very much possible. We just keep saying that number कि 3 करोड़ से 8 करोड़ डीमैट अकाउंट हो गया. अभी वो एक्स्ट्रा 5 करोड़ डीमैट अकाउंट्स को आप मल्टीप्लाई करो 5,000 से 10,000 से 20,000 से 50,000 से लाख से या 2 लाख से, कहीं पर 2 लाख रुपये से कर दिया एज ए टोटल सेविंग्स, it's 1 lakh crore additional through that active PM demat accounts. Forget about what is going in mutual funds as SIP, which is whatever 8 to 10,000 crores a month.
Yeah, that has also reached up to 13,000 crores.
And as of now, our pensions and others are still not fully unlocked, both as a policy as well as mindset to participate into equity markets. So I think that yes, bouts of volatility will continue, but our internal rate of saving is pretty reasonably good. And as we keep more and more financializing our savings, we have more legs to go with our own internal savings also.
All right, so we have a lot of questions which has come up. So the first question comes from Vijay. I think Vijay, your question is already answered about FIIs continuously selling. So I think she just answered, so I'm not taking this question. The second question is, new technology-based aggregator business are coming into play and are growing very fast, but however, their fundamentals or financial performances are a bit hazy. Do you think that it would be new multi-bagger sector itself in the near future? What do you?
So my view is no. In the near future, this can't be a multi-bagger, but given a 5 years plus kind of a time horizon for your investments, these are some of the plays which will rule, is what I also believe, because they've got actual traction with users. They've got that critical mass to survive. It's with their ambition to grow faster that they're losing money. We can't forget that. So I think they do have a moat, but not in near future that they can become multi-baggers. I think it is, you will have to give a time horizon of 5 years, given the kind of rate hikes or tapering that is expected. I wouldn't also say that it's dirt cheap, go rush by. You will get time to gradually accumulate these worthy businesses.
Sure. So next question is particularly about automobile industry. So with the Indian government focus on global forum is on lowering carbon emission, what are your views on electric vehicles? Do you think that automobile companies should have subsidiary companies in EV arena so as to show their performance separately? What is your expectation from EV and bioethanol fusion?
So EV is here to be there. There is no doubt about it. Till the time EV fully unlocks or popularizes both in terms of EV refueling capabilities across, as also the vehicle capability. I think there could be a possibility of hydrogen technology also getting commercialized, because all this will take a decade to shift from carbon emitting to non-carbon emitting vehicles. And in the process, I think a lot of established winners will have to leave their turfs, because once in case you get that particular initial subsidy to buy an EV product, as we know, the running cost is almost not there or is so low that adoption will be faster. And in the process, the market shares will change of all the players. From current winner products to new winner products, how the journey will pan out is very difficult to say. EV will win. How the products will win and who will be the winner, time will only say, and we will have to keep watching it. But for sure, established large market share players will have to give way to the new players. So in turn, if I want to relate it to the markets, I feel that some of the players have such high valuations right now, which I feel is difficult to sustain.
All right. Next question is, during this budget, it was digital, and digital. So any views on that?
No, I think whether digital interface with clients or whether back office processes to be digitized, there is no other way but digitizing. For any businesses, it's not that there are only technology businesses or there are new businesses which will digitize. All the existing businesses and interfaces gradually will digitize. So that's why we've been very bullish generally on IT sector, and we believe in terms of their growth, they are into multi-year growth cycle, from the fact that their growth had been 7 to 10% in last decade or 6 years, and now it will be 12 to 16% in next 5 to 7 years. Having said that, valuation is a different game which we need to keep an eye on while taking investments back. But yes, digitization globally and in India is the way going forward, and which is what we both are doing right now.
Yeah, it was great interacting with you. Last question from my end before we conclude the session. So, there has been a lot of focus on quant-based investments of late, and your organization has also taken a lead in this regard of managing, PMS money under this area of artificial intelligence and machine learning. And so, can you throw some more lights on that?
So, globally also, if you see in last almost a decade, there has been a tectonic shift from active management to non-active management, quant-based or passive. And the reason being, with all the intelligence at its help, the active managers, 90% of the active managers could not beat the benchmark, which means that paying that extra fees for human comprehension of globalized economy was not working out. So what worked or grew is either the ETFs, where you follow the benchmarks, or quant-based investing, where also human emotions were put to rest. Just to give you an example, we have also developed some 8 different meters. And sometime in midst of that COVID problems, when market had tanked from whatever 12,200 to 7,500, at 8,450, our quant meters gave us a strong buy signal and indicated a 75% weightage to equities. If we had to intervene, knowing what kind of noise was around, what kind of volatility was around, do you think we could have put 75% money into equity? Not at all. And at 15,400, it reduced first time that 75% equity to about 60%. And at 18,000 400, it reduced to something like 20 or 30% as indicator. So what we are trying to say is that dispassionate view can come only when you leave it after a thorough research. So as what I said, there are 15 years of data across the globe which has been backtested with it intercorrelation and put on machine learning. So machine also keeps correlating the data and throws the answer. But we think that times are there where this segment is what going to work. And as more and more efficiency comes into the markets, it will be very difficult for active managers to outbid the benchmarks.
All right. So it was great interacting with you. So much to learn, a lot of insights. So thank you so much for taking the time out and joining me today. Thanks,
My
everyone.
pleasure, Vikas.
Yeah. If you have any question, please feel free to write to me. I'll speak to Amisha and get your question answered if anything is left out. Thank you.
Thank you very much. Bye, Vikas. All the very best.
Thank you. Same to you, ma'am. Thank you.